and a warm welcome to the latest episode of FinPod. Get ready to delve into the exciting world of election fever with us today. The year 2024 is set to create a momentous period in the history of democracy. With more than 60 nations participating, representing half the global population, these countries are gearing up for crucial elections. These elections are expected to involve approximately 4 billion voters and will cover a range of political positions, including presidential, legislative, and local elections. These global democratic exercises will be of an unprecedented scale. For instance, India's legislative elections, known as the largest in the world, will span multiple days. At the same time, Indonesia's presidential vote will take place in a single day, highlighting the contrasting approaches. In comparison, North Macedonia's presidential election will be conducted on a more modest scale. India is renowned for its vibrant celebrations, but the elections will mark an important milestone this year. Thousands upon millions of Indians participating in this democratic process will make the country a magnificent festival filled with enthusiasm and commitment to vote at all levels of government and become part of democracy and civic engagement. Coming to the title of the day, Indian stock market sentiment in the election year. So on Saturday, the Election Commission of India, the country's independent poll conducting body, announced the dates for a democratic exercise unmatched in scale globally and in history. Election and Sensex return. So there is a link between these two. Let us see how it is. Here, past data helps understand the market trend and answer the central question about market performance during the Lok Sabha elections. Please have a look at the table. The stock market's performance before and after election results can vary widely. For example, during the 2004 Lok Sabha elections, the market saw significant gains in the year before, but a sharp decline after the results were announced. On the other hand, during the 2009 Lok Sabha elections, the market saw significant decline before the polls, but gained after the election results. It is also interesting to note that the polls have a long-term impact on the stock market, as seen in the 2 years returns column. As the election results become apparent, the market sentiment remains optimistic as investors anticipate the government will continue implementing economic policies and reforms. However, if the election results are unclear, volatility may arise. Nevertheless, some investors seize the opportunity to invest during such volatile times as it sometimes provides entry points. For instance, the stock market was volatile before the 2019 Lok Sabha elections. The market rallied after the ruling party's decisive mandate as investors expected the government to continue its economic policies. A few sectors related to stock market momentum. First is the travel sector. As a large population of the country travels back to its native place to cast a vote, and this coincides with the summertime when tourism picks up. Second is the media sector. It remains focused as political parties use this platform to reach a more extensive audience base, thus boosting ad revenues. And the last one is FMCG companies. These companies are increasing stocks of small packs of biscuits, chips, packaged water, and beverages costing ₹5 and ₹10 each by up to 10% across the country in anticipation of a short-term spurt in sales. So in this case, what should market investors do? This question will start with a quote from Christopher Davis. A 10% decline in the market is fairly common about once a year. Investors who realize this are less likely to sell in a panic and more likely to remain invested, benefiting from the wealth-building power of stock. To understand this, being patient usually pays off in the long term. Understanding that various factors can influence the stock market during an election year is crucial. One effective way to approach the markets is to analyze the sectors in detail and examine how the expected or upcoming policy changes could impact the economy. Secondly, if the company's fundamentals are robust, no amount of volatility can bring negative results to the portfolio. To put it simply, believe in this quote firmly. A market downturn does not bother us. It is an opportunity to increase our ownership of great companies with great management at good prices. This is the quote from Warren Buffett. To wrap up, please remember that elections are just one event and it's important not to get swept up in market noise. As an investor, it's crucial to maintain a clear investment horizon, trust in the company's fundamentals, consider your risk appetite, make informed decisions, and focus on long-term investment goals. Thanks for tuning into today's segment. I hope you found the information helpful. If you have, please comment yes below. If you have any recommendations, feel free to share them in the comment section or via email. Thank you.